Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, August 18th, 2016, and we are looking at the Dow Jones Industrial Average, which closed and has been in settlement for about 15 minutes, eking out a very, very small gain on the day. Nonetheless, up 23 points at 18,597. Standard & Poor's also trading higher, up 0.16% at 2183. And the big mover today is absolutely crude oil. Crude oil closing up over 3% on the day to close at 48.27. So traders, no doubt, the underlying characteristic of the equities markets over this last week has been small dynamic steps. It has absolutely been a narrow range, and a range in which it has consistently flirted with these record historical tops and either matched them or come close to them, but certainly not taken them out. Now, in other markets, that might be an extreme reason to look for that market to soften. And I'm thinking of commodities that tend to have absolute tops, not absolute, but defined tops and bottoms in a market. You look at cattle, you look at any of the meats, you look at the grains, and they typically have this range that you rarely will see corn get over a certain price or under a certain price. The same cannot be said with U.S. equities. U.S. equities over time continue to climb, and I believe will continue to do so infinitum. In other words, we're talking about global companies that over time are going to be worth money, and this being the index of those companies, absolutely it's something that we will see the market hit new tops, have that ceiling, and then at some point press above that. That intermixed with dynamic corrections that sometimes are told in advance, the warning signs are there, and sometimes absolutely come out of nowhere. But all in all, any way you look at equities markets, they climb, they retrace, they climb, they retrace, but they end up going to new highs year after year after year, and I don't expect that to change. Now, we finally have made it over this ceiling. This was our former top right in here, and that, of course, occurred the end of 2014, is really call it the beginning of 2015, when it flirted with these till about April, June of last year. Then we had two real dynamic sell-offs, one predicated by some concerns in China, the other one I called the Christmas meltdown, so to speak. But on each occasion, it has rallied. Now, on the former occasion, after the China fiasco, so to speak, the market came up and couldn't even test these former record tops. However, on this last rally, we tested, we failed, came back down with a higher low, and lo and behold, we moved to these new record highs. So now we've got a new ceiling. And so the fact that the market is going to trade, sideways or trade towards the top but not be able to define or break through that doesn't surprise me at all. When these corrections come, I'm not certain that anybody can say with any kind of certainty that a correction is imminent in the market. But one thing I can tell you, we will see corrections and we will see new record price highs. To that end, my current target in the Dow Jones Industrial Average is 18,800 up to 19,000. I think that that's going to be obvious. Now, whether that occurs during this rally or after a correction. And when I say correction, I'm talking about a move that's a 20% retracement, 10% retracement minimum. I'm not talking about a little blip down, or whether we'll see a trade sideways and then move up. That is anybody's guess. But in terms of the big picture, the market is moving higher, and it has given us new highs for the year. Oil has just been one of the most dynamic markets just in terms of the moves that we have seen over the last year or so, considering the fact that February of this year, we saw oil trading at $26 a barrel, and this was at double bottom and we had the same kind of chart formation in the equities markets. They were trading pretty much with a 90% correlation. We had this W that formed and then completed right in here. Of course, this market has never looked back. You had dynamic rallies followed by sizable retracements, another rally, and a very sizable retracement. We've talked about how all these fib numbers match. We also talked about the targets that I had, and the lowest target being 39. We absolutely hit that, but I personally believe that we would stay within the confines of this bear channel that's right here. And 4 to 5 days ago, we certainly realized that that could be a model that has to be really revisited. And there's absolutely no doubt we've got this dynamic breakout at this point. I was looking for some potential resistance to come in roughly at 48. Now I'm looking at technical areas in which the market has shown either support or resistance. And so that's where that number came, but we had to close above that. And so if this particular market high holds over the next couple of days, we could see it form a base and then go and try to take out these $52 area. I don't think that's going to happen. As I said, I thought that the market pretty much throughout the summer was going to trade lower and sideways. We certainly got the lower. We didn't really get the sideways, but guess what? August, September's coming up, and summer is over. And so for that reason, we're obviously back into rally mode. The real question is, at what point will crude oil begin to find a high point and then trade lower? Right now, if it's not here, it's going to possibly even test 52, although I'm still going to say after this defined rally here, we could see it sell off a little bit, but then traders, take a look at the kind of moves we've seen. Anything's possible in oil. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.